What's going on, everybody? This is TerrenceRe, and I got a weekly update for you guys. First video of the week. I've been a little bit under the weather, not nothing too bad, but just not getting my voice like I wanted. But this week has been an eventful week. If you checked out my last video, I was talking about on how to trade in reference to, I think I went over gold. I talked about Tesla. Tesla has exceeded the level that I thought that I had it pegged going down for. I had tweeted out to a guy online. I think his handle was like Trend Spider or something like that. And he had like a bounce coming, and he had a bounce coming on Tesla. Right around. I'll show you how he had it drawn out, and I probably would have had the same thing, but I just figured like if you looking at all of this, like right here, you see the support, and it's the fourth time. It's like, hey, it's not gonna hold up, and I got, this is a weekly, and also Tesla could run all the way down here. It's possible. I'm not calling this. The last level in this expansion right here, this Fibonacci extension is 104.78. Now I called 220 right here. Now I don't know how far it's gonna go down, but it's possible. With everything going on with Elon Musk and the Twitter deal, him having to purchase or maybe possibly having to purchase Twitter at 54.20. If you purchase Twitter at 54.20, being as that it's currently, I wasn't intending to look at that, but since let's talk about it. What is the handle for Twitter? Was it TW? There it goes, TR. So, and what the market is telling you. So if you're looking at, you want to figure out what is Twitter really worth. Now his deal is on the table at 54.20, right? That's what he tweeted out. Right now it's trading for $50. So he'd be, if you were to get into this stock right now at $50, you're probably getting it at maybe a $4 discount, maybe just based on the price that he's gonna have to purchase it at, right? So the market is already factoring in that, hey, this deal is gonna go down, and it's gonna go down right around this level. When it goes down, the market is telling you that it's priced in. So at some point, I think the deal will get worked out. We don't know what it's going. If you're looking at this, Twitter is going up, and if we go back over here to Tesla, Tesla is going down. So the market is telling you that this deal is not positively affecting Tesla the way that it is affecting Twitter in the market, price action wise. So keep that in mind. Personally, I would not be messing around with Twitter. I wouldn't want any parts of that. I don't like the option market in there. So, and this is what we looking at it right here. We was to come into the option market, and let's just look at this week, 6 days, right? The option market, let's look and see. People are trading it though. Y'all crazy. If you ask me, you crazy. Because you don't have anything. It got a $3 expected move. Check it out. This is the market pricing in. So where is this deal at? 54.20, right? It's trading at $50.45. What's the expected move? $3.40. $3 plus 45 is what? 53.45. Add 40 cents. Where you at? You at right around 54.20. You right around that range. Like 54 or 53.80. You right around that range. Like 53.85 or something like that. You right around 54. The market is telling you that, hey, it's pricing in all of its action right around there, and you're not getting any juice like to sell this selling calls. You're not getting anything for it. Even if you bought a call, let's say you bought calls at 54 for 4 cents. You just, I'm gonna buy a whole bunch of these for the week. If it get there, now you would make some money because that's if it get there. This is a 4 delta. Basically, you have like a 4% chance of getting there. So I mean, I wouldn't. I just stay away from it. I wouldn't even. I don't like the I don't like the way it's priced. It's priced perfectly almost. I just don't see how you can really make money on it. But so that's my little spiel on that. But let's talk about the expected move next week for the overall market, and I do that by looking at the SPX, the option market for the S&P 500. So what I like to do right now, there we go. Go to charts. So I have an indicator. Um, let's see. I can I have an indicator that I like to use. I come up here and think or swim. So you see how that little box comes down, and I can put up in that box. See this little gear? When I click on it, I can put whatever buttons up there that I want, and add. I can add like a style. Like I got different setups over here where I measure. There's one down here like a VIX pairs ratio, volatility setup, volume profile, and then you can have those up there and they'll be up there quickly, or you can just come up there and click on them. And how you put that box up there, you come up here to this gear setting right here, click on that gear setting, and then you would come over here where it says my tools, and that's the my tools. See, if I put on each chart, every window I open up, it's gonna have that up there. If I put single panel, so if I had it up like other screens up there, it would only put it on one panel, but I got it on each chart. And then you hit apply, and it's gonna have that little box up there. So when I come up there, this indicator is gonna show the expected move for the week. I'm gonna click on it, and as soon as eventually I'm gonna have to upgrade my computer and get a faster CPU, because that's what's look like. That's what I'm getting this error right now on my OBS. So let's just give it a minute. See if it does something. So basically, once the indicator comes up, and you see it gave me a little error report. Okay, click that continue. So what we're looking at right here, you see right here the green, that's showing you the expected move for the week from here. That's on the upside, the downside. So that expected move that we see on the option chain for the Friday weekly expiration, it just plots it for me here. So the market closed here, and this is the same amount up as it is down. So this is about, you see it closed at 35.83, and the top of the range is what, 36.85. That's about 120 bucks, 122. So we got $122 on, roughly expected move for next week. That is a large expected move for the weekly move. And we got that basically in 2 days, like swings. You see how we had those swings last week. So that's the option market pricing in price action movement for next week. So we're going to get, for the most part, we should have a volatile week next week. So make sure you're comfortable with your risk. And it could go either way. Now, I don't know which way the market can go. It can go down, but generally what happens is the price action around these areas, option, that you tend to see a lot of trading around these areas, both intraday, all throughout the week. So I like to look at that to see how to kind of gauge if this is going to be a busy week or not. You probably been watching, if you've been listening to the news and you've been on Twitter, you've been hearing about interest rates. The Fed is raising, they're doing some stuff, maybe unprecedented. I know there was a time they talk about Paul Volcker raising rates. I don't know if he had this many rates over this extended period of time. I'm not sure, but they definitely are raising rates and getting them up there fast. So one of the things that I do want to take a look at is I show you guys how you can look it up yourself. I already got it pulled up, but you can basically just go in here to Google and put in like Fed Watch tool, and that's all that. If you Google Fed Watch tool, you'll be able to come up. You'll be able to click on this, and that's what this right here is. The Fed Watch tool is, and you see this link up here, cmegroup.com. So this, the market already knows basically that we're going to get a 75 basis point interest rate increase at the next FOMC meeting. And you can see that right here. You see the probability. So right now, the current target rate is 300 to 325. That's what our current target rate is. Now, the right here where it says 350 to 375, if you do the math, 350 minus 300 is 50. 375 minus 325 is 50. So that would be a 50 basis point increase if they were going to do that. It's only a 2.8% probability of that. But we have a 97.2 of being at 375 to 400. So we already know it's darn near, that's in a real country, darn near a for sure thing that we're going to get 75 basis points, right? So you would say if the market knows that it's already priced in, that's my thesis. I'm saying that the market is telling us this. That's why we continue to have, that's why we continue to have this erratic behavior. That's why we have this down move from August, and we just continue to go down. Right? I'm gonna take this expected move off. I just right click on it. But that's why, in my opinion, the market has been doing this. Because we know, the market knows that, hey, that's why we're getting these down moves, that, hey, we're gonna continue to have high interest rates. If we're gonna have high interest rates, then generally equities, they decrease, they go down during high interest rate environments. So it's not like it's not rocket scientists. It's not rocket science. It's not that you can't still purchase stocks and then trade around it, because you can see we have up moves within the down moves. It's not like the market goes straight down, but they say, well, how can you time this stuff? It's, unless you can do some things with technical analysis, but what can you do? Well, if you have a long portfolio, you can sell calls against your existing shares. You can get short and not sell, like something like if you own the SPY, it pays dividends, and generally over time, I'm not saying it's going to happen this time, but most of the time the market bounces back. So you could just own your stock, collect your dividends, and sell your call options. You'd have been getting paid on the way down. Still would have been losing money though. The hedge, you should never let the hedge become the risk. So selling a 30 call is only going to knock 30 deltas off of a 100 delta position. So but you can trade around this and keep your, I have a long-term portfolio that I manage in Fidelity. I'm up on the year, but that's just because I'm using options to trade around current long positions, and now I'm currently long gold. And I know I told you guys that, and I'm going to talk about the risk to the dollar, and I just think that the risk to the dollar and what we'll have as a hedge to that risk to the dollar is going to be gold. So let's see if we can. I'm gonna close out this Fed watch too. Maybe that'll help me move a little faster. But let's take a look at let's take a look at the dollar first, and then we'll come. This is the dollar, and this trend line, guys. I drew this trend line. I don't maybe on a previous video, but if you look at it, guys. And so, how one of the ways we got it crossed over right here, and then pulled back in, and then we got a high right here. Now, let's see if I draw this here, put in some fibs, see what we get. That didn't quite. So all I'm doing right now is I want to see what this retracement is going to look like. Right up there, it hit this fib retracement level, got a little pullback. I want to see if that holds. This is my thesis. If it holds right here, we should, now it could go up here and take this out. But if this area holds, and then we get a rejection right here next week, and the dollar begins to come down and shows some weakness. It almost looks like an M right here. You see, you got your up, pull back here. Let's see if we get a pull. Let's see if we get a breakdown into here next week and take out this low. My thesis is if that happens, then we should continue to see gold break back up. Let's take a look at gold. If we look at gold right here, gold has had an up move and then a pull back into here. So if the dollar continues to go up, I believe that gold will continue to come down. This is your way. This is the way that I'm playing the dollar being overbought. Let's go back to the dollar. Let's put it on the weekly. Let's look at the weekly. You see, look at how steep that is. That is parabolic. At some point, I don't know when. I'm not telling you I know when and how to time it. At some point, with the dollar rising like this, where we will get some kind of drop. I don't know how much it will drop. But if we get that drop in the dollar, then we should be able to get long. We should get an up move in gold. And so that's what I'm playing. I'm gonna link my last video in here where I'm already in gold positions. I'm long gold right now. I'm down a little bit of money last week, but I'm holding my position, and I'll show you where I'm holding. We're gonna go to the 4 hour. We're gonna talk a little bit of Elliott wave analysis. This is the 4 hour on the gold futures. When I seen this up move right here, I put my fibs on. It pulled back to the 38.2%. That's my sweet spot. 38.2 in between the 61.8. Got to pull back into here and came out and took out this high, right? So then I throw my fib extension on. It went up to the 1618. That's the first. So I got my 1. This move right here would be 1. The up move 1. This pullback would be 2. And then we got 3. And then the fourth wave is kind of like the correction of the 3. And a lot of times you don't know how long this fourth wave will last. So it's just kind of down in here. Now, if gold comes and take out this low, I'm wrong. I will close my positions and take my losses. Because then at that point, I know I'm wrong once it takes out this low. I need gold to stay within. I'm cool as long as it stays within here. I got plenty of time. I still got all the next week and a few days of the following week on my put spread in the gold futures. And I have some leap options in GLD, which are like in the 60-day range. So I'm fine on those. Now I needed sometime this week to make a move. I just needed to bounce back up into here. And as you can see my projections, I got the next move up right around 1778. That's my next level. If it comes up to take out this high. And so, that's just that's just a little glimpse into what I'm looking at next week, what I'll be trading. I'm still on I'm staying on gold. I'm staying gold. I may even scalp gold futures if I get that up move. drop down on a 5 minute or something and buy some futures during the day. Do try to make a little money scalping. But that's what I'm on. I'm in anything that got precious metals. You can do that by trading gold futures. If you can't trade gold futures, you can trade GLD. You can trade GDX. You can trade GDXJ. And I think silver is even, any of the precious metals should move with gold. They should, right? And we should ultimately make, possibly, there's no guarantee, but because you can see these down here, these your Euro USD, which is the /6E. This is your Euro USD. Look at that. Look at that. Same type of pattern. And it's even actually starting to move up a little bit. We see. So you could trade the currencies because the euro and the forex market is before in front of the USD. So if the dollar comes down, you can get long Euro USD and get bullish and try to make some money on that as well. So these are ways to play a possible down move in the dollar. So I'll be watching for that and then looking to make a little money and maybe the currencies, and I'll be in gold. But I may come over here because this is a real cheap product that you can put on and try to make a little money in. Hey guys, if you got something out of this video, please hit the like button, subscribe, hit that little bell notification so you can see when I do a video. Sometimes I go live during the market. I hadn't been doing it the past couple weeks. But if that's something you want to see me do when the market's live, I can do that. And if you got something that, some ideas, you got some stocks and stuff that you want to see me do, or you got some stocks that you looking at, please let me know. Because if I see it and I like to trade, then I'll put something on, and we're gonna make it do what it do. So with that, guys, I'm getting ready to watch one of these games. It's Saturday here in the States. We got Alabama, Tennessee. I'm picking Tennessee to win that thing. Well, to win this game anyway. I got Tennessee upsetting Alabama today. The offense is nasty. They got a real good scheme. I like how they put the wide receivers out wide, make you cover the whole field. The quarterback is hot. I think it's going to be a barn burner. Alabama going to have to score points to keep up. I don't think they're going to be able to keep up. So it's going to be an exciting game. With that, guys, if you give me your comments on that, if you're an Alabama guy, comment Roll Tide in the comments. I don't know what they say in Tennessee. They ain't been saying too much the past few years because they've been losing. But this year they got a lot of mouth, and they deserve to be able to talk this year. Tennessee playing. Shout out to the Vols. They playing real good this year. And then with that, guys, I'm out. Peace.